Our mission at SD Bullion is clear. The lowest cost gold and silver available online. While we do not have pretty blue boxes, free shipping, 4% credit card fees, or glamorous gold and silver infomercials, SD Bullion has the lowest prices that may save you hundreds on your next order. So before you make your next investment, do the math and join the over 15,000 new customers who have recently made the switch to SD Bullion. Why pay more?
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. Joining us again is our good friend Craig Hemke of TF Metals Reports. Great to have you back on the show.
Hey, what's up, Doc?
We'll just leave it.
It never gets old.
No, it doesn't. It doesn't. Well, what's up is gold and silver this week, particularly after the FOMC statement on Wednesday. What's your thoughts?
Well, let's dial it back a week. You know, we had gold being, I guess, kind of marked down, held down. We finally broke out of what was technically a very positive thing. We broke out of what looked like a pennant on the chart. And this is last week, and gosh, if you have any textbooks around about technical analysis, almost every single one will say, boy, you put up a flagpole and you put a flag on it and then break out higher. That means that you're halfway done with the move. And so when we broke out last Thursday, after the ECB announcements, there was every reason to be excited. Thursday night, gold opened higher still when Asia began trading, about 8:30, 9 o'clock Eastern. Got all the way to 1284 and were immediately set upon by the banks. I mean, think about it, you've got all these fundamental positives, whether it's the flow or alleged flow at least, into all the ETFs. You've got all these demand, I guess we'll call it data points from around the world, Russia, China, India, all these positive things happening for gold. And then you throw on top of it this technical stuff, well above the moving averages, breaking that flag, bursting to a new high up to 1284. And what happens next? We go down $50 over the next 3 days. Only in gold, my friend. And you could see it in waves. It was really, look, I've been doing this now 5 or 6 years. It was some of the most egregious, direct, blatant cartel manipulation that I've seen. Really had me concerned. Doc, you were kind enough to reprint something I wrote back on Tuesday, trying to clarify, what this commitment of trader stuff should mean to everybody. Really thought with the markdown that they were getting ready to really run the specs. And as it turns out, they marked it down $50 just so they could absorb the $35 back up after the FOMC. And now here we are, as we're recording this Thursday, where it's been 24 hours since the FOMC. Gold initially rallied. The cartel banks, we now know, created about 9,000 new contracts just yesterday to feed to the specs that were coming back into gold yesterday. And now in the 24 hours since, the dollars continue to go down. The yen has continued to rally, and gold is 100% sideways, unchanged. It's really remarkable to watch. With a
downward bias.
With a downward bias, that's right, Eric. It's really remarkable to watch. I tell you the one bit of good news, though. We've been watching really closely at my site copper, which is also an HFT-driven market. Copper's been keying off the appreciating yen, the falling dollar yen, the falling dollar index. And copper's been rallying. It went up and tapped its 200-day moving average about 2 weeks ago. It finally today has moved through and closed above its 200-day for the first time in almost a year. If copper can extend from here, which you'd like to think it would, given where it is technically, that's going to create maybe a little additional push for silver, which actually finally got above 16 today. Silver miners are all going crazy. Maybe silver now will finally rush to catch up a little bit in the next couple of days.
We were joking, we were joking on the phone before we started hitting the play button, and it's now I guess it's about 3:30 or so Eastern or so when we're recording now. Earlier in the morning, it was very clear that silver was leading the way and gold was going in a channel that's being managed by high frequency trading as well as this short issuance that Craig is speaking about here. And even when silver touched a little bit above 16, gold was responding to that. But then, boom, the cartel comes in and continues to push on gold first and foremost, and now they're able to get silver to calm down. But what's interesting from a technical point of view, it looks like the cartel is trying to send a signal that gold is definitely in a blow-off top. And if you look back at February 11th, we hit that intraday peak spike of 12.63 and 90 cents on a spot basis. And what do we see today? Well, in the last few days and then today, completely counterintuitive to absolutely everything that's going on. I mean, there's no reason for gold to go down now. And we see it going below their targeting of that intraday spike high of February 11th, 12.63 and 90 cents. They're trying to paint the picture to the technical traders that this has been a fake move from that inflection point from a February 11th onward. I mean, it's just astounding.
Yeah, it is. And, it will be very interesting to see if that continues going forward. The biggest problem that I think paper gold has, and again, this is the price that everybody references still around the world, is whatever is found on these paper markets in New York. We've run from the end of January. The total COMEX gold open interest was about 380,000 contracts. As of yesterday, it's now back over 500,000 contracts. So the banks have increased the amount of paper gold on the COMEX by almost 30%? Yeah. And at 130,000 contracts is 13 million ounces of paper gold that they've created, whatever that is, 400 metric tons or whatever it is. They haven't put any more gold in the vaults. They haven't, done anything of the sort. They've just simply created all this new paper. And what they're attempting to do is feed that paper to the speculator interest and eventually stall it out. And I think that's what the problem currently is for gold, is in a sense, it's a little bit out of gas in that we've run this open interest now up to 510,000 or whatever it is. And everybody that has going to buy has bought, because even back in the day, 2010, 2011, open interest was routinely only about 540, 550,000. So we're almost back to those levels of players, if you will, in the paper casino. And unless we draw in more players that are willing to buy more contracts, then we're left with more sellers than buyers. And as I'm talking, I'm watching gold go down in the Globex. We're almost going to go back under 1260.
Yep, and that's what, in fact, they'll try to basically cut at least 1/3 of yesterday's move through the Globex session. That will be basically their goal. And we'll see a bit of that. I don't know if it'll, by Friday's mid-session in the COMEX, if we in fact get that much damage and we lose a third or a half or whatever. But that's what they're trying to do. They're trying to erase the history of yesterday's move and paint it as a false signal.
Yes, exactly. Even though fundamentally there's nothing false about it.
Yeah, of course.
But that's what they have to do. And again, the key to all of this, and people are like, why do they care and all this kind of stuff? Well, the key is in the West, whether it's Europe or here in the U.S., we'd like to buy stuff that's going up. We don't want to buy stuff that goes down or sideways or anything like that. And so the key to physical demand in the U.S. and in the West is a rising price. And so they will fight like crazy to keep they just took $1.50 out in one tick. Now we're $12.58.
There you go.
Remarkable.
You didn't have to wait long.
No. The key to managing physical demand in the West is managing sentiment. How do you manage sentiment? You manage it by price. And so that's why, again, when last Thursday, when you've got this wonderful looking technical pattern on the chart, and you got a breakout to new highs at 1284 at 9 o'clock at night, after this extremely positive moves in the currency markets after what had happened in the ECB, with now the euro being devalued and they're going to be printing euro to buy corporate debt. And it's madness. The next morning, if it was anything other than gold, you'd have woken up and we'd have been north of 1,300 and charging higher. Mm-hmm. But that could not possibly be allowed. And thus we were slammed back for 72 hours. And thus we've been basically slammed backward for the last 24 hours.
Yeah,
because
and
go ahead.
Our audience is kind of skeptical, or at least a good chunk of them. The stacker community is pretty skeptical about technical analysis and whatnot. And I have to reiterate this every time because we always have new audience members coming in. this stuff is really important because in the West, London trade and COMEX, et cetera, the vast majority of people that are moving money around are in fact responding to technical signals. It makes every reason in the world why the cartel would do exactly the kind of tape painting that we're describing here, and that's the reason why we're taking as much time as we do to focus on these technical signals, because the cartel's using them to move the prices around and change sentiment.
Yes, and that's what I've maintained for the last 3 years. We've seen the series of lower highs in dollar-priced gold because they're trying to control sentiment and thus physical demand. The problem they're having now, again, is that price moved up so sharply, so quickly, that we are now so well above the key moving averages. I mean, you got to go all the way down to 1180 to even find the 50-day. That it's these spec high-frequency trading machines. I kind of think of them as like having an internal switch. And when price is set above rapidly rising moving averages, they're all kind of programmed to buy the dip rather than sell the rally. And so they push it back, but then it just kind of seems to float right back up. I just hope it's a losing battle. I'm not seeing any signs yet that it is a losing battle. And like I said, as you posted earlier this week, Doc, I think we all have to be acutely aware of the amount of shorts that these banks have laid on both silver and gold over the last month, knowing that with history as our guide, eventually the banks are going to do whatever it takes to kind of tip the market over and force all of these specs to run for the exits, because then as the specs sell their paper longs, the banks take the other side, buying back all of these shorts and covering them back up. That's what they're going to want to try. They tried it, like I said, Friday, Monday, and Tuesday, only to get thwarted by Mother Felon yesterday. But this idea
Mother Felon, I love it. We got to make sure that you get credit for coining that term.
I can't even call her anything else anymore. That's just who she is, Mother Felon. Anyway, they'll try to run it back. That's kind of, and they're trying now. They capped hard, and now they're trying now as we speak. It's going to be difficult, again, without another surge of speculator buying interest, which is why they're not, that's why they capped so hard today, because if we all of a sudden move up and take out 1280 now, it would lead in more spec money. So they're doing everything they can to keep that from happening. And it just is what it is. It's the battle we fight. It's the corrupt system that prices gold and silver this way. And until the day comes that these paper metals, finally, people lose confidence in this pricing scheme, it's what we have to deal with.
Yeah, but then again, it's pretty clear that in the last, basically since August, but absolutely in the turn of the year from 2016 onward, especially if, after we get through that takedown that we had mid-January, the market's trading differently. There are new buyers in this market.
Yeah.
And they do step in and they buy dips, and they have been accumulating. And even though we've had these periods where, a February 11th spike comes in and then all of a sudden you get some bleeding out. But from that point forward, we still had accumulation, and we were overbought for a long period of time. And then still, even with the cartel trying to bleed away momentum and constantly attacking and all of the shenanigans that we all know and document on a daily basis, they still weren't able to do much. And here we are now, maybe we'll go down a bit, and maybe the cartel will get some traction. But this new class of buyers are aware of the fact that the fundamentals have shifted, and we have brand new, longer-term institutional money. That's what, in fact, in part explains what's going on with the silver shares.
Right.
A big money wants in, and they can't easily get in when it comes to buying physical. We all know that. And they don't really want, at least the smart money doesn't necessarily want to go berserk on COMEX and get exposure to paper silver. So what's a large investor to do? They go and they buy the really large capitalized companies in the space. And look at them now. I mean, Tahoe, First Majestic. I mean, companies like that had really big moves today. And I think that speaks to one example of the footprints that we can see of a different kind of buyer that has in fact begun to move into the sector, and that's what's going to ultimately, in the very least, create the managed retreat process that Bill Murphy speaks about. And it's not the recipe per se that'll have a Comex force majeure anytime soon. Not that kind of fireworks. And we'll have to deal with all the histrionics and downdrafts that the cartel can engender periodically. But my final point is this whole notion that a lot of people sometimes belabor, thinking that the cartel is all powerful and that it's just hopeless and we're never going to get anywhere. That's going to change. That was the kind of valid psychology and assessment that we labored through for the 4+ years of the bear cycle that we endured.
Absolutely. And we're seeing it, I think, in this physical market, and that's ultimately what it's going to take. What most folks, I think, are so frustrated and sick and tired of the games, the paper games, and how the banks are fully in control. What it's going to take at some point is just a simple delivery failure, one way or the other. Because again, it's really a confidence scheme that these guys are running. It's like the run on the bank in It's a Wonderful Life. Where everybody wants their money out at once, or any other fractional reserve system is just a confidence game. You keep your money in the bank because you feel comfortable that when you show up there and you want $1,000 out of your account, they're going to give it to you. But if all of a sudden you hear that the banks are going to close, starting Monday at noon, oh crap, you're going to get there as fast as you can and get your money before anybody else.
Yeah.
And that's kind of the same thing in the paper gold and silver markets. We have all these unallocated accounts. We have these warehouse receipts and warrants and all this garbage, GLD, everything. All these things, people think they have an exposure to gold, and they think, well, if I ever want my gold, I can get it. No, I'm sorry. Others will lay claim to it before you do. The only gold that you own, and silver for that matter too, is the stuff that you've got in your safe. And when the music stops, that's going to be extremely valuable to have. And the music will stop. You look at these banks, they are living clearly off of flow, trying to meet demand out in the East. We've got, we could list stories for the next hour of anecdotal things that we've heard. I'm sure all three of us. But in a way,
explain a little bit about what you mean by flow, because some of our listeners won't get what you're saying.
Stock would be, I have this abundance of metal in a vault, and as people buy it from me, we just move it out of the vault, and it's like inventory, if you will. Mm-hmm. Where flow is more like the just-in-time wholesaling, if you will. It's like let me put it. Let's compare it to a loaf of bread or a gallon of milk in your grocery store. When you're confident that there's going to be an abundance of milk and bread over the next few days, you don't feel like you need to rush out and get milk. Now they're living off of flow. You empty the refrigerator and some guy in the back puts more into it, right?
Yeah.
That's the stock that's there, and when the stock's gone, they empty the truck and it goes right into the refrigerator. But when there's going to be a winter storm or a blizzard and everybody goes at once demanding their milk or demanding their bread, the shelves end up empty. And that's kind of what's eventually going to happen in gold and silver. These banks are living off of flow now. When China, Russia, India, whomever demands metal, heck, we're hearing stories that some of those countries are buying doré straight from the mines.
Right.
Okay, because look at those stupid GLD and the other one, IAU or whatever the hell that symbol is, where they
BlackRock ETF.
BlackRock bought shares in the GLD.
Yep.
They bought enough shares in the GLD to become listed as an authorized participant, giving them the ability to cash in those shares and take a withdrawal, which apparently they did back on Tuesday.
Yeah,
this is how crazy it is. And
I know that if you were running a margin account on your own stock account, that you would be aware of what your limitations are for margin, right?
You got that right.
And since when is BlackRock not aware on a minute by minute basis, never mind end of day, whether or not they've exceeded their authorized capital on the
Right.
ETF, and if they have a problem when they've issued too many shares and they got to call a timeout. I mean, come on, guys, that's a cover story.
And to get metal now, right now.
And then they go
have to-
and get it from GLD
Yeah.
at the same time. I mean, it's
Yeah.
a cover story.
That's where they had to go get it, apparently. Again, we're talking about just-in-time metal delivery, too.
Exactly.
Okay?
Great
And
analogy.
so the confidence scheme that it will be there when you want it is what allows this fractional reserve bullion banking pricing structure to keep going. What we're going to run out of is the confidence scheme is going to shatter when someday somebody wants delivery and they can't get it. I mean, not like you or I, but somebody in size.
Yeah.
And then all of a sudden, the whole thing just unravels. And that's what they're desperately trying to prevent by shorting paper. The other thing they're trying to prevent is more paper losses. I mean, if Ted Butler's right and JP Morgan is sitting on let's just call it a net short position on COMEX of 20 million, or I'm sorry, 20,000 contracts, okay? That's 10 million ounces of paper silver that they're short.
Right.
So every dollar, it's 100 million ounces of paper silver that they're short. Every dollar that silver goes up costs them $100 million. Now, you may think, well, that's nothing for JP Morgan, but on one trading desk, that's a lot of money. And a $5 move to $20 would cost them $500 million. Now, we're not quite to London whale territory yet, but we're getting close. And so these banks are in there not only trying to manage price and sentiment and physical flow and all this kind of stuff, they're trying to protect their positions too. So we're in there, we're fighting a game on a daily basis. I know it's frustrating as hell for people to watch, but I think what most people listening to us have to understand is this game is moving toward the end, a final failure of confidence in these banks to supply the metal. When that comes, it's not going to be the end of the world. It's not like all these banks are going to go out of business. JP Morgan may lose $2 billion. And, the folks on CNBC will, when the next time they report earnings, they'll say, and JP Morgan had to take a $2 billion write down for their exposure to the COMEX metals market that is now closed. And no one will give a damn. But at least finally silver and gold will be free. It's free to trade. Free to trade, yeah, to some extent. So it's a very interesting time to be alive. And it's going to be, I think the last time we talked, we called it a year of consequence. It's certainly going to be that.
Certainly has been an interesting year so far. And we're seeing the same thing in the bullion industry on the just-in-time inventory. The larger authorized purchasers from the U.S. Mint and the larger distributors. We're 9-10 months into the big demand spike that began last June. And everything is still just in time. You talk to any of the large wholesalers or mint purchasers, and, we expect to get eagles in from the U.S. Mint in 3 weeks, so we'll take your order. Everything is when they expect to have that next couple ounces of silver or gold, and they'll sell to you now based on what they're expecting to get.
That's exactly right. Hey, what do you guys think of Yale in the next game? You got any? You like Yale? Sorry, I'm a little distracted. I can't decide between Yale and Baylor. I'm sorry. What was your question again, Doc?
The listeners will have the answer for you, Craig.
Just joking.
The better question is, are you going to get some green beers this evening?
I got a green shirt on, so if I spill any when I'm slobbering drunk, no one will know.
That makes two of us, Craig. That makes two of us. One of our guys today, after I walked in, he was like, "You sure are festive today." And I looked down, and I'm like, "Oh crap."
That's really funny because I have a green shirt on, and I frankly didn't even think twice about it when I was putting it on this morning.
That's what happened to me.
We're just kind of like bopping along, Oh,
I told
St.
everybody
Patty's
on my
Day.
side.
Oh, okay.
I told everybody on my side, and this is true. After watching what happened last Thursday night, and then watching during the day last Friday, where they trimmed it for $6 right at the London PM fix, 10 o'clock Eastern,
Right.
and then. Think of how insane this is. Gold went sideways in about a $1.50 range for 6 hours. No, 5, not 6, 5 hours. Sideways. In this world of HFT with stock going this way and that and everything else, gold goes in a $1 range basically for 5 hours. I looked at my buddy Sweetness. We're on a golf course because I said, I got to get out of here. I'm playing golf. And I showed him that. I said, You never see this anywhere. And he just laughed. I said, you just watch. They're going to come hit it now sometime on the Globex when no one's watching. And at 3 o'clock in the afternoon Eastern time, 1 hour before the New York Stock Exchange closed, bam, they took $12 out of it in like 5 minutes. And why did they do that? Because that gave it enough time also for it to ripple through into the mining shares as well, which is also part of the reason why it's getting worked over here at 3 o'clock Eastern on Thursday to try to get the Hui back down to where it might close negative on the day if they're successful. And so anyway, to wrap up the story, I was so just disgusted by all of this last Friday that I took the natural human being course. Is what men have been doing for centuries. When they get frustrated, I went out and got loaded. And, it helped. I have to admit. Got me through the rest of the
your
day.
weekend blog preparations were the most focused yet, huh?
Exactly. Beer
is a smart drug. Come on, man.
Exactly.
Craig, in one of those posts breaking that down, you posted a screenshot of a spoofing trade. And I think a lot of listeners and readers probably aren't familiar with exactly how that works. Why don't you take a moment to explain that?
Well, this is run off of high-frequency trading as well. Okay, so this is not, this is, everything kind of goes back to that. I think most folks will notice as we talk. And what happens is you've got the computers, first of all, you've got the computers that are buying and selling gold and silver, particularly the spec computers that are buying gold and silver. And they're taking cues off all kinds of things. But there'll be the banks will run their own high-frequency algo that spoofs in massive offers to sell from time to time, giving the appearance to another computer that, you don't want to buy here because, 50 cents above here is this huge sell, to keep the computers from buying. That's why it's called a spoof. What you mentioned is a guy on my site was able to grab a screen grab. They're really hard to grab because it's just, we're coming in milliseconds and flashing these massive order sizes. If you've still got it, Doc, feel free to post it with this thread. And what that particular screenshot showed was your average bid and offer stack, where I think the price at that time was $12.59 or something like that. And you might have 3 contracts to buy or to sell at $12.59.10, and 8 contracts to sell at $12.59.20, and another 6 contracts at $12.59.30, and then 977 at $12.59.40. Like, what?
And to explain that, what happens, Craig, if you're a guy's trading in your mom's basement and do that?
Oh, yeah, exactly. No kidding. You get to go to the hole with that guy from Subway.
Yeah.
Well, the order actually would never even enter the system because the person in the basement would have an account that would say, "Sorry, dude, your account is not, capable of making
Assuming
that
you have
order.
the funds,
Go back
though, but,
to Subway."
Yeah, exactly. And that's right, too, which, again, tells you who the culprit is. And those things will flash in. That's spoofing. Spoofing actually is a term that guy at Nanex came up with back in 2010, that Eric Hunsuter. And it's now, I think you could even look it up in the Urban Dictionary. That's an actual, everybody knows what it is. And it's these high frequency computers do it in stocks all the time. And again, the idea is to keep whatever that you have away from moving up. I have no doubt that 5-hour period with a $1 range last Friday, that's all done by spoofing. That's how you keep the machines from buying. That's how you keep a lid on things.
And again, you can see even today, as we record, gold has definitely got that HFT collar wrapped around it.
Yep.
The tightness of its trading is throughout the COMEX session in particular. That's when it started, and that's where most of the COMEX paper boys are.
Think about
it. The HFT trading.
The minute Yellen, Mother Felon, opened her mouth yesterday, we were at 1260. We are 24 hours later. Dollar index is broken down by another point. It's well below its 200-day moving average. The yen has been volatile as hell, and gold is 1260.
And all the while, silver was rocketing higher, and the miners are doing great. And certainly the silver miners all throughout this whole morning. But
it's really remarkable.
The HFT collar was there, and now they're beginning to get some traction in the overnight session. So,
and at the end of the day, what people need to realize as we talk about this, one, if you're foolish enough to be in there trying to trade this stuff against these computers, I mean, there's a reason why 90% of all the small speculators get blown up in 90 days. It's because they're fighting a fight that they can't win. Now, the only reason that I even have a site is because I've always been successful at pretty well predicting short-term moves because I understand what we're up against. You don't want to just simply look at it as, oh, technical this and flag that and moving average this and that. We know who's in charge, and so therefore we know how they're going to act, and we can anticipate that and use that to our advantage. But at the end of the day, people shouldn't be fooling around in the casino. What they need to understand is this is all being done in an attempt to prop up a fraudulent system. And that fraudulent system, this con game that these banks are running and managing price the way they are, is going to fail. Now, it may not be tomorrow. It may not be next week. It may not even be this year, but it's going to fail because at some point...
It's a process, too. It's
right,
absolutely an evolutionary, or better said, a devolutionary process that could accelerate very quickly in the end game.
Yes.
A lot of times people say, it's going to either be a complete binary crash kind of analysis, the binary analysis, and it's got a crash period, end of story. And if it doesn't, then, hunky-dory, things continue on. And that really feeds into the main point. Precious metals as insurance has to come first and foremost. It's okay if people want to trade and whatnot, but when it comes to the stacker perspective, what the stackers get right more so than anything else, and what the Wall Street guys, the paper guys are beginning to get a sense of, is that they're going to look around and at some point begin to increasingly realize that less and less gold's going to be available, and the people they're competing against are going to get it before them, and that's going to freak people out. And that's the kind of scenario that can help lead to that final busting of manipulation, breakaway $100 plus moves in gold, that kind of move.
And one last thing on that, if the accepted, if you will, ratio between the price of gold and silver has historically been between 10-1 to maybe 20-1.
Right.
So somewhere in there, what are we now?
And even that now, like 30s would be reasonable.
Yeah.
For longer term, it's just nuts now. And I think we're going to see a reversal in the gold silver ratio in favor of silver within 30 days. And that even though we have this short term period of our probable cartel success and whacking us down a little bit further in the next week or whatever, this is just noise. And even the gold-silver ratio is going to start telling people within a month's time, holy cow, you know what, this was just noise. We have the powers that be trying to paint the tape to hide what are unbelievably bullish developments with the ECB and Yellen's moves in the last week and a half, or less than a week. I mean, it's just unbelievable that they're able to pull this off, but that's what happens when you have a system that includes media that doesn't tell the truth.
And at the end of the day, that gold-silver ratio is telling you just how extreme and corrupt this pricing system is. Yeah. If historically it's been, let's call it 20 or 31, and now it's 80, that's telling you something right there. So when this finally falls apart and the confidence finally fails, and we move toward a system where maybe it's only slightly leveraged, if leveraged at all, well, gold's not going to be $1,259. And based off of that ratio, silver's going to be a little higher than 16. And so the smart move is just to continue doing what you're doing. And frankly, it's nice that sometimes this metal is so illiquid. I don't want to say this on the internet. I got a safe full of silver buried at the bottom of a river in the Andes Mountains. Yeah, that's where it is. But anyway, I don't go into my safe on every up or down tick and pull out 20 ounces and sell it. And the word that's really going to appreciate is the fact that it is kind of illiquid. It just sits. So when all this happens, all of that stuff's going to be far more valuable, at least in a dollar conversion standpoint. And that works to my favor. It's like the long-term investor, the people that buy and sell and day trade and all this stuff, all they do is kill themselves. I remember seeing a stat at the end of the 90s, after the bull market and the dot-com things going crazy. And there was, the average stock market's up 15% a year this decade. And then the mutual fund review company Morningstar went in and did a survey. And they found the average investor was up 2% a year. They're like, wait a second.
Right.
The average mutual fund's up 15. Well, that's because if you held it, you bought it in 1990 and sold it in 1999 or whatever it was, you made 15%. But that's not what people do. They wait until, now things are really cooking, like we said, with gold. They don't buy anything while it's down or going down. They wait until it's after already up or going up. And so that's where holding physical metal really is to your advantage, because it'll just sit there. You just continue to add to your pile on a dollar cost averaging basis. And then one day when this all falls apart, it's going to be far more valuable than it is today. Yeah, which now they just took another couple dollars out, Eric.
Better get that beer.
Yeah, I'm headed there now.
Hey, Doc, before we go, we should probably touch on anything that might be interesting coming across your desk as far as physical customer patterns and whatnot from SD Bullion's desk. See anything interesting?
Demand flow overall is probably down a bit this week, with the momentum to the upside tapering off a little bit. Earlier in the week anyways, but it's still strong. I mean, the U.S. Mint has now sold 13 million Silver Eagles through the first 2.5 months. So they continue to sell every coin they can produce. And like I said, the APs have already sold the next couple of weeks' expected allocations already forward. So I continue to expect that to continue for the near future, if not the entire first half. We'll see.
Maybe the U.S. Mint should have a GoFundMe account to go buy some new stamping equipment and be able to deal with more blanks.
It's a great
They always
idea.
give the excuse of, we got some die turnover that we got to do for next generation coins and whatever thing they'll pull out of their hat to excuse away the 1 million coin allocation rule that they got now.
I mean, they haven't even used their own San Francisco Mint since 2014. The whole last 10 months where they haven't been able to keep up with demand, they haven't bothered turning on any of their presses in San Francisco. I mean, they got a whole facility that just sitting there collecting dust.
The whitehouse.gov website has a facility where people can establish petitions, and if there's 100,000 people that respond to a petition, the White House has to formally make a statement. So we should set up a petition on the White House and get everyone that listens to our podcast and Turds Work, and then get all the folk in the industry to send lots of people to that petition that we can create and say, hey, why don't we reopen the San Francisco's Mint printing press facility? I mean, they went to the extent of actually having a law that was up and operative for a number of years demanding that all silver produced or all silver eagles in the United States be sourced from silver produced in the United States. And they had to change that law.
Yeah.
It's comical.
That it is, my friend.
All right, well, before we wrap up the show here, we got one final Herculean task for our good friend here, Craig. Give us your final 4 picks.
Well, I got to tell you, based on the part of the country I live, everybody likes Kansas, no doubt about that. I like Michigan State, though, in the end. That Izzo every year is just tough as nails. And so you can always feel pretty sure they're going to be there as well. So at the end of the day, I'll take Carolina, maybe Oklahoma, Kansas, and Michigan State. And let's have Michigan State cut the nets in a couple of weeks. That would be my guess.
There you have it.
Take that to the bank.
Yeah, there you go.
All right, my friend. Thanks for joining us again. It's great to have you back.
Hey, guys, my pleasure. And it'll be fun the next time we talk to see how things have changed or not changed.
All right, so that's a wrap for the Doc, Eric Dubin, and the turd himself, Craig Hemke. Thanks for tuning into this week's SD Weekly Metals and Markets.